Hi, this is PR Sundar. In this video, I'm going to talk about the difference between option buyer and option seller. There are myths around the market, so I hope to clarify few important things in this video. Every time people talk about option seller, they say it's unlimited risk. Just for your information, you have unlimited risk everywhere in your life. Every day I switch on TV, I find some people die out of accident. So are we going to say getting out of house is unlimited risk? Therefore we don't go to work, we don't go to study? No, that's not the case. Somehow I feel this unlimited risk has been magnified for option seller. In this video, I'm going to explain what are the advantages of option sellers over the option buyers. What are the three major advantages people think about option buyers? Number one, option buyer pay a little premium money, whereas option seller has to pay huge margin money. Number two, option buyer carries limited risk. His risk is limited to the premium paid, whereas option seller carries unlimited risk. Number three, an option buyer carries unlimited reward, whereas the option seller carries a limited reward. Now, basically, if all three things are favorable to the option buyers, logically everyone should be a buyer. But you find that for every contract bought, there is one contract is being sold. Then who are those people? At this point of time, I would like to bring a very interesting thing. Do you know that Nifty is being traded in Singapore also, which is popularly known as SGX Nifty, where the volume is almost equal to India Nifty volume. It is so much liquid in Singapore. But do you know that not even a single option contract is being traded in Singapore? Whereas 90% of the volume traded in India is from options. Why there is no options being traded in Singapore? Very simple. There are no buyers. Everyone there is a seller. Nobody is a buyer. When there is no one to buy, naturally the trade will not take place. As you all know, SGX Nifty is dominated by FIIs. So there are no buyers. Okay, let us come back to these 3 points. These 3 things which are favorable to option buyer, everybody knows. Now I'm going to tell you what you people do not know. Number 1, an option buyer pays only the premium money. Let us say 2,000 or 3,000 rupees. Whereas option seller will have to pay huge margin money, maybe 80,000, 90,000 rupees. But there is one big difference. An option seller need not pay the hard cash to the exchange. If he has got any assets like shares or mutual funds or bank fixed deposit or banker's guarantee, so those things can be given as a collateral, so he need not pay even a single rupee from his pocket. Whereas the option buyer, though he pay only 2,000 or 3,000 rupees, he has to pay the entire money in the form of cash. So that is why I always say the return is infinity for an option seller, as there is no hard cash is involved. Whatever money he makes, it is an additional return in addition to his collateral. So this is one big advantage for option seller. Second one, option buyer has a limited risk. It is actually how you see. If you have got 5,000 rupees, you put 5,000 rupees on the table, buy an option. If that goes to zero, there are two ways of looking at it. One, you lost your entire capital. And or you can see you lost only 5,000 rupees, which is a limited risk. For option seller, they always say, you will blow your account one day, you will go bankrupt in one day. Say if my net worth is 20 crore and I kept 15 crore in some other assets, I'm playing only with 5 crore in stock market, I'm a seller. Even if that 5 crore becomes zero, still I'm not going to become a bankrupt. So a person who is having a 5,000, putting the entire 5,000 on the table, okay, they say is not losing his entire capital, they say he's limited loss. Whereas a seller putting some money, they always say he loses entire capital. Though theoretically it is a limited risk, okay, by losing 5,000 many times over and over again, so a person can go bankrupt. Second thing, if a buyer says Nifty will go above 12,500, a seller says it will not go above 12,500, then what is the probability of winning? The probability of winning for option buyer is less than 20%. That's because there are 5 scenarios. Market can crash violently, or market can fall a little bit, or market can go sideways, or market can go higher slightly, or market can move violently higher. So the buyer will make money only if the markets move violently higher. In all the remaining 4 scenarios, he will be losing. So the probability of buyers winning is around 20% only. Whereas the probability of seller winning is very, very high. So though he has unlimited risk, but his probability of winning is very, very high. And third one, option buyer has unlimited profit. Though theoretically it is correct, practically tell me, will the Nifty go to 1 lakh point by end of 1 month? Or will Nifty go to zero? So Nifty makes oddly few hundred points up and down. So it doesn't make a very big move. And I'll give you an interesting aspect of psychology. A buyer, let us say he buy the option for 50 rupees. It goes to 100 rupees. So he has already doubled his money. But what he will do? Will he book the profit? If he book the profit, then it will go to 200. So where to book the profit? That is a very big dilemma for option buyers. And they don't book the profit under 100 rupees, then it goes to zero. You must have seen, especially on expiry days, option from 10 rupees will go to 50 rupees, then from 50 rupees it will go to 0 rupees. So though option buyer carries an unlimited reward, that affects his psychology, where to book the profit. Whereas for option seller, though his profit is limited and he knows that is his maximum profit, so the greed never comes into play. So either his stop loss hit or his target is hit. So that's it. This is the third one. Now, I'm giving you one simple analogy. As a buyer, If you think that you are putting in a limited capital, you have a limited risk and you have an unlimited reward. Though you say limited premium, still it is running into thousands, 2,000, 3,000. Limited risk, still it is 2,000, 3,000 loss. Though unlimited reward, you may get 5,000, 10,000 or 50,000 maximum. Why don't you buy a lottery ticket which costs only 10 rupees or 20 rupees? Your premium is 10 rupees, 20 rupees. The maximum you lose is only 10 rupees or 20 rupees. The reward comes, it can be 50 lakh, 1 crore also. But people don't do that. Why they don't do that? Because they know that the probability of winning is very, very, very low. I tell you, with the limited capital, if you want to make unlimited profit, I repeat, with the limited capital, if you want to make unlimited profit, there are only two possibilities. You give me 10,000 rupees today, I can arrange to give you 10 crore tomorrow. It's very simple. You go to black market, buy a revolver, go to a bank manager, put the gun on his head, ask him for 10 crore, he will give you. But what is the risk? If you are caught, the rest of your lifetime, you will be in jail. So, with the limited risk, if you want to make unlimited profit, so there are two things only. Either the associated risk will be very, very, very high, or the associated probability is very, very, very low. So the bank robbery is an example where the risk is very high. Buying a lottery ticket is an example where the probability is very low. So you remember, either your money or your skill only can make more money for you. So don't believe the hypothesis limited risk and unlimited reward. So the probability of option seller winning is always high. Let me ask you one simple question. You go to any other field. Let us say there are two people working in the same field, A and B. B is much richer than A. So A will always feel inferior to B. Tomorrow, if you have got money, will you dare to open a telecom company in India against Reliance Jio? No, you will not. Why? Because you know the Jio promoter has got lot more money than you. So the probability of your winning in a business is very, very low if you are fighting against a rich person. But only in stock market, the people with very, very low money, they think that they can fight with option seller who have got very good amount of money. And the option buyer feel superior to option seller. I am not saying that option buyer cannot make money, but over a longer period of time, making money consistently through option buying is very, very, very difficult. I am not saying not possible, but you need extraordinary skill. And whereas option selling, you don't need extraordinary skill, you just need to have extraordinary capital. So that is the basic learning point here. So if you have a good capital, be a seller, and if you have got a very low capital, and if you think that you have got extraordinary skill about judging the market, then you become a buyer. Right. Thank you for watching. So continue to watch our channel. We will come out with many more videos. Thank you.